With us from the edge of the trading floor in Chicago at the CME Group is Oliver Sloup with Blue Line Futures. Oliver, that report this morning seems to have given some of the wheat traders a little something more to talk about today.
Well, I wouldn't say it's too exciting. Yeah, it was a better than expected exports number, but the bulls want to see a trend of better than expected exports. I think some of this buying activity is likely just short covering, and quite frankly, that's the only buying I'd be doing in this market. We've seen a trend of lower highs and lower lows over the past several months, so I think this ultimately will set up for a better opportunity to sell at higher prices. We could really rally another 20 cents, and the bears could still be in control from a technical standpoint. We know that ample global supplies and relatively dismal demand outside of a report here and there has kept a lid on this market, and I expect that to play true here as we round out the year.
All right. That corn market really started out with just a little bit of a sense of strength here this morning, but now we're waning as we're getting closer to this close. Is it just being drawn down by the downdraft from soybeans?
I think there's a little bit of spillover. We've been kind of talking about that 350 level being a big magnet to the market. It was for that December contract. I think it will be again for the March contract. The key level to watch is going to be 345. If we break and close below there in the near future, we could see some accelerated selling pressure come into the market. Not a whole lot of support until 335. I think instead of trying to pick a bottom in this market as we trend sideways, I think we really want to see some sort of capitulation instead of a slow bleed lower. I want to see the spike down and the buyer step in. That's something we have not seen in this market for several months now.
Got about 30 seconds left here. What about this soybean? Have we broken underneath this 200-day moving average now, and are we headed for 950?
Well, the 967 to 968 was the November 14th lows, I believe, as well as a Fibonacci retracement level from the June lows to the July highs. We must close above this 967 level. A failure to do so, I think, encourages long liquidation from the funds and presses us closer towards that 950 level.
All right, Oliver.